What's up guys, welcome back to Mark's Stock Review. Hope you're doing well today. This video is going to be on the SPAC Northern Genesis. I'll briefly go over the transaction details and a snapshot of their merger target, Lion Electric. I'll then lay out the key details of the Amazon deal and then briefly go over what Lion Electric has to offer. And lastly, I'll go over whether I believe now is a good time to buy. I'll keep the video brief without fillers to respect your time, so a thumbs up would be greatly appreciated if you do find the video helpful. That said, let's get right into it. Northern Genesis is a climate solutions infrastructure SPAC set to merge with Lion Electric. After completion, the pro forma implied market cap is going to be $1.9 billion with $200 million in pipe. The transaction with Lion Electric has already been approved and the expected merger date should be in Q1 2021. And the new ticker symbol is going to be LEV, which will automatically change over in your brokerage account. And finally, the purpose of the transaction is to support the planned construction of a new manufacturing plant in the USA, continued development of advanced battery systems, and finally, planned construction of a highly automated battery system assembly factory. So a little bit about Lion Electric. They're a small Canadian company targeting mass transit, paratransit, and schools. They sell all-electric trucks, class 5 through 8, and electric buses. And they have a small manufacturing plant in Canada with a 2,500 vehicle capacity yearly. They have 650 planned deliveries for 2021 with already 300 vehicles on the road. A quick look at their financials shows that they're going to be free cash flow positive by 2023, and the bulk of their revenue growth is going to be coming from their trucks, not buses. EBITDA is going to be positive by 2021, and there's going to be triple-digit sales growth from 2021 through 2024. Next, I'm going to simply lay out a few details of the Amazon partnership, which I believe are important. Amazon will purchase up to 2,500 trucks, but the total number will be determined ultimately by Amazon. Amazon's also going to have the option to buy shares of Lion Electric and warrants. However, note that vesting of the warrants do require Amazon to spend $1.1 billion annually. And so ultimately, Amazon could end up owning up to 20% of Lion Electric, which is really important for investors to be aware of. On the other side of the deal, Lion Electric is required to reserve manufacturing capacity for Amazon of 500 trucks per year from 2021 to 2025. Lion Electric is also required to provide maintenance and training to Amazon, and because of all this, they're planning on building a much larger factory in the USA to accommodate. Moving on to Lion Electric's vehicles, they're all built ground up, meaning they have no retrofitting or third parties, and they're all assembled in-house, including the battery packs and powertrain. Also, their vehicles are designed to withstand harsh weather climates. They've been tested, and their vehicles have been operating in cold climates since 2016. Lion Electric also offers turnkey solutions, meaning more revenue in-house. Their Bright Squad division involves local maintenance parts and service teams, and their Lion Assistance division is technical support both pre- and post-sales of their vehicles. They have a Lion Academy division which offers driver training programs for mechanics, drivers, and fleet staff. And finally, Experience Centers, which serves as a hub for their turnkey solutions and to provide training for EV capabilities, charging infrastructure, and local funding. And the last thing I want to talk about before I get to whether it's a good time to buy is their energy division. It's end-to-end charging infrastructure solutions to support a heavy-duty electric fleet. They help determine the best charging solutions, installation, and technical support. And Lion Electric is not doing this alone. They're working with local leaders, including ChargePoint and Blink. So is now a good time to buy? First of all, full disclosure, I don't currently own shares. If I own shares, I would definitely not be selling. The question is now a good time to initiate a position or be adding shares? I want to make a few key points. First of all, I like how they're spacing out their news. They have good PR, they're producing school buses for special needs, and they're doing a lot of charity work. And from my point of view, this is very important because it has a direct reflection on Amazon's image. And so if Amazon does decide to take a 20% stake in Lion Electric, this will be one of the reasons why. And so normally I would not be buying at this time because it's after the merger announcement and the good news, but before the actual merger, which historically can be a very risky time to buy. However, the potential for Amazon to own 20% of the company outweighs the risk from my point of view, so it's a good long-term investment as long as you're willing to ignore the short-term volatility as it gets closer to the actual merger date. And this potential stake in Lion Electric also decreases the chance investors will dump post-merger. And my last key point is that the recent run-up also sends a message to investors that it's a true growth company. And so bottom line, I do think it's a good time to buy. I'd be spreading out my trades in order to average out my cost basis. That does it for the video. I hope you guys found it helpful. If you did, a thumbs up would be greatly appreciated, and subscribing if you haven't already. I do upload 2 to 3 new videos per week. Hope you guys have a great rest of your day, and I'll be talking to you soon. Take care.